If you've ever wanted to invest in the stock market but felt intimidated by complicated trading platforms, SoFi Invest has made the process surprisingly beginner friendly. Whether you're looking to buy your first share of a major company, build a long-term portfolio, or even experiment with fractional shares, SoFi Invest offers a streamlined experience that allows everyday investors to participate in the market without needing years of financial knowledge. In this guide, we're going to walk through exactly how to buy and sell stocks on SoFi Invest in 2026. We'll cover everything from opening your account and funding it to placing your first trade, managing your portfolio, and understanding some of the common mistakes new investors make. By the end of this video, you'll know exactly how to navigate SoFi Invest and confidently execute your first stock trade. Let's get started. Before you can buy or sell stocks, you'll need a SoFi Invest account. The platform is designed to be accessible to beginners, and the sign-up process is usually straightforward. After downloading the SoFi app or visiting the website, you'll create an account, verify your identity, and provide some basic financial information. This verification process is required by federal regulations and helps protect investors from fraud. Once your account is approved, the next step is funding it. You can connect a bank account and transfer money directly into your SoFi Invest account. Depending on your bank and transfer method, funds may become available immediately or take a few business days to fully settle. Now that your account is funded, it's time for the exciting part: buying stocks. When you open SoFi Invest, you'll see a search function that allows you to look up companies by name or stock ticker symbol. A ticker symbol is simply the shorthand abbreviation used on stock exchanges. For example, Apple trades under AAPL, Microsoft trades under MSFT, and Amazon trades under AMZN. Suppose you're interested in buying shares of a company you believe has strong long-term potential. You can search for the company and open its stock page. Here, you'll find useful information including the current share price, market performance, company details, analyst ratings, and recent news. Many beginners make the mistake of immediately purchasing a stock simply because it's trending or because they heard someone mention it on social media. Smart investors take a few minutes to understand what the company actually does, how it makes money, and whether it fits their investment goals. After you've selected a stock, you'll click the Buy button. This is where SoFi gives you several options. One of the most beginner-friendly features available is fractional share investing. In the past, investors needed enough money to buy a full share of a company. If a stock traded at $500 per share, you'd need at least $500 to purchase one share. Today, SoFi allows you to invest a specific dollar amount instead. For example, you could invest $10, $25, or $100 into a stock, regardless of the full share price. This means you can build a diversified portfolio even if you're starting with a relatively small amount of money. When placing your order, you'll enter either the number of shares you want to buy or the dollar amount you'd like to invest. After reviewing the order details, you'll submit the trade. At this point, many new investors wonder what happens next. The answer depends on the type of order you're placing. Most beginners use what's known as a market order. A market order tells the brokerage to buy the stock at the best available current price. Market orders are simple and usually execute quickly during market hours. However, stock prices constantly fluctuate. The price you see when placing the order may not be exactly the same price you receive when the trade executes. Usually the difference is small, but it can be larger during periods of market volatility. More experienced investors often use limit orders. A limit order allows you to specify the maximum price you're willing to pay for a stock. The order will only execute if the stock reaches that price or lower. For example, imagine a stock is currently trading at $102 per share, but you'd only like to buy if it falls to $100. You could place a limit order at $100. If the stock reaches your target price, the order may execute automatically. Understanding the difference between market and limit orders can help you become a more disciplined investor and avoid paying more than intended during periods of rapid price movement. Once your order executes, the shares will appear in your SoFi Invest portfolio. Congratulations, you officially own part of a publicly traded company. Your portfolio page acts as your investment dashboard. Here you can track your holdings, monitor gains and losses, review account performance, and see how your investments are performing over time. It's important to understand that stock investing is rarely a straight line upward. Even strong companies experience short-term price fluctuations. Some days your portfolio may be up significantly, while other days it may decline. This is completely normal. One of the biggest mistakes new investors make is reacting emotionally to every market movement. When stock prices drop, inexperienced investors often panic and sell. When prices rise sharply, they may rush into investments without doing proper research. Successful long-term investors generally focus on fundamentals, maintain discipline, and avoid making decisions based purely on fear or excitement. Now let's talk about selling stocks. Selling on SoFi Invest is very similar to buying. From your portfolio, select the stock you'd like to sell and tap the sell button. You'll be asked how many shares you want to sell. If you own fractional shares, you can often sell a specific portion of your position rather than the entire holding. For example, if you've invested $1,000 into a stock and want to take some profits while remaining invested, you might choose to sell only part of your position. After selecting the amount, you'll again choose the type of order. A market sell order will sell your shares at the best available market price. A limit sell order allows you to specify the minimum price you're willing to accept. Imagine a stock is trading at $95, but you'd prefer not to sell unless it reaches $100. You could place a limit sell order at $100 and wait for the market to reach that level. After reviewing the transaction details, submit the order. Once the trade executes, the proceeds from the sale will appear in your account balance. Many beginners assume they can immediately withdraw funds after selling a stock. However, stock trades generally require a settlement period before the cash becomes fully available for withdrawal. Understanding settlement timelines can help you avoid confusion when moving money back to your bank account. Another important concept every investor should understand is capital gains. Whenever you sell a stock for more than you paid, you've generated a capital gain. Depending on your country, tax laws, and holding period, you may owe taxes on those profits. Conversely, if you sell for less than your purchase price, you realize a capital loss. Capital losses can sometimes offset gains for tax purposes. This is why keeping records and understanding the tax implications of investing is important. While SoFi provides account statements and tax documents, it's still wise to familiarize yourself with how investment taxes work in your jurisdiction. Let's discuss some practical strategies beginners can use when buying stocks on SoFi Invest. One of the simplest approaches is dollar cost averaging. Dollar cost averaging involves investing a fixed amount of money on a regular schedule regardless of market conditions. Instead of trying to predict whether stocks will go up or down next week, you invest consistently over time. For example, you might invest $100 every month into a collection of stocks or exchange-traded funds. When prices are high, your money buys fewer shares. When prices are low, your money buys more shares. Over time, this strategy can help reduce the impact of short-term market volatility and remove some of the emotional decision-making from investing. Diversification is another key principle. Putting all your money into a single stock can be risky. If that company performs poorly, your portfolio could suffer significant losses. Many investors spread their investments across multiple companies, industries, and asset classes. This diversification helps reduce risk because the performance of any one investment has less impact on the overall portfolio. SoFi Invest makes diversification easier through fractional shares, allowing investors to own pieces of many different companies, even with limited capital. Another feature investors often appreciate is the ability to monitor watch lists. A watch list allows you to track stocks you're interested in without purchasing them immediately. Suppose you've identified several companies you'd like to own eventually. Instead of rushing into purchases, you can add them to your watch list, follow their performance, read news updates, and wait for opportunities that fit your strategy. Patience is one of the most underrated skills in investing. The stock market often rewards discipline more than constant activity. Many successful investors make relatively few trades and focus on long-term growth rather than daily market movements. Let's also address some common mistakes beginners should avoid. The first mistake is investing money you'll need soon. Stocks can be volatile and market downturns happen regularly. Money needed for rent, bills, emergencies, or short-term expenses generally shouldn't be invested in stocks. The second mistake is chasing hype. Social media trends, viral stock picks, and speculative excitement can tempt investors into making impulsive decisions. By the time many trending stocks receive widespread attention, much of the price increase may have already occurred. The third mistake is failing to research investments. Buying a stock without understanding the company is essentially speculation. Taking a few minutes to understand a company's business model, revenue sources, competitive advantages, and risks can help you make more informed decisions. The fourth mistake is overtrading. Constantly buying and selling can lead to poor decision making, unnecessary stress, and potentially higher tax obligations. Long-term investing often produces better results than trying to predict every market move. The fifth mistake is letting emotions drive decisions. Fear and greed are two of the most powerful forces in investing. Learning to remain calm during market fluctuations can significantly improve your long-term results. As you become more comfortable with SoFi Invest, you'll likely discover additional investment opportunities beyond individual stocks. Many investors eventually explore exchange-traded funds, index funds, dividend-paying stocks, and other investment vehicles that can help build a diversified portfolio. The key is remembering that investing is a journey rather than a one-time event. Every successful investor started somewhere, and most began with the same questions and uncertainties you're experiencing today. The beauty of modern investing platforms like SoFi Invest is that they remove many of the traditional barriers that once kept ordinary people out of the stock market. With fractional shares, user-friendly interfaces, educational resources, and low account minimums, it's easier than ever to start building wealth through investing. Buying and selling stocks on SoFi Invest in 2026 is ultimately a straightforward process. Open your account, fund it, research your investments, place your trades, monitor your portfolio, and stay focused on your long-term goals. Whether you're investing $10 or $10,000, the principles remain the same. The most important step is simply getting started. Time in the market is often more valuable than trying to perfectly time the market. By developing good habits, staying consistent, and continuing to learn, you can use SoFi Invest as a powerful tool for building your financial future. If you found this guide helpful, make sure to like the video, subscribe to the channel, and turn on notifications so you never miss our latest investing tutorials, stock market guides, and personal finance tips. Thanks for watching, and we'll see you in the next video.